Okay, everybody, it's me, Gregory Mannarino. It is Sunday, October 16th, 2022. And this, of course, is my newest segment of Markets to Look Ahead. And we have a lot to talk about. I'm sitting here writing stuff down, all of this, some of that. And can you say that? Oh, whatever. There is writing there. It's weird. Anyway, people, let us take a step back for a moment and look at the bigger picture. What we have here, and it's been going on for a while now, clearly is some issue, and it's a big one, with regard to the debt market. And it's not just Greg Mannarino anymore, or you talking about this, okay? You even have the creature. I'm going to call it a creature. I'm referring to the thing. It's a thing, okay? Janet Yellen, all right? She's been out here. It has been out here over the past several weeks trying to convince you and me everything is fine. She does not see a problem in the financial markets. Everything is functioning properly. But Friday, she does a 180. Actually, I think it might have started Thursday, okay? A 180. Now she's very concerned. We is the word she used. We are very concerned about liquidity here in the debt market. She's way behind the curve here. Remember, she didn't see inflation skyrocketing. She believed it was going to be transitory, temporary. Everything was going to be fine. Completely missed that one. Really? Oh no, she knew that was coming. See, but again, she's out there to propagandize, to deceive you, to distract you. Now, there's a game being played here. Okay. We understand that the Federal Reserve is somewhere in the middle of what they're calling a quantitative tightening. They're aggressively raising rates because they want to combat inflation, which I'm laughing. I can't help myself sometimes. Hasn't done a damn thing, nor is it meant to. It was never meant to do anything with regard to inflation. What raising rates does, people look, let's talk about economics 101 here, okay? When an economy is running very, very hot, things are booming, cash is moving from place to place. The Federal Reserve sometimes has to put the brakes on. And they do that, again, by raising rates. Now, raising rates, what it does, okay, is hit demand. So the Federal Reserve, obviously, they're not, well, I was going to say not stupid. They're not stupid. They're way ahead of the curve. They know what's going on here, and they're directing the global economy and the financial system in a direction they want it to go. We're in a global free fall. The economy is in free fall. And they're raising rates into an economic free fall, trying to stifle demand even further by, again, raising rates along with other central banks. And they're trying to convince you that this is somehow going to miraculously lower inflation. Well, it hasn't worked. It's been going on for many months. It's not working. It's not meant to work. What would work? Let's just cover that real quick. If the Federal Reserve and central banks around the world, if they honestly and seriously wanted to stop inflation in its tracks, they would raise the capital reserve requirements for the banks, contract the money supply, poof, inflation would disappear. You will not hear that from a mainstream financial channel or a politician or a Fed chairman or whatever. Okay, not going to happen. Oh, but we did find this out. How about Fed President Bostic, who's trying to dictate our lives? Well, apparently he's been caught in multiple occasions here of insider trading. He's admitting that it has happened over the last several years, that he has violated central bank's ethic rules. The man's worth over $10 million, okay? What do you think is going to happen to Fed President Bostic that he has, if this were me or you, we'd be in handcuffs right now. Handcuffs, but not this, not a Fed president. They can do whatever they want to. They're too powerful. You see, here's the deal with Fed presidents here. If, for example, Fed President Bostic would get arrested, it would rock confidence in the system. System comes down. This is why central bankers can get away with anything they want to. Look, it's a confidence game. You got it? Confidence game. That's all it is. How does the financial system work? Okay, it works on the belief that it's going to continue to function like Janet Yellen. Oh, everything is just fine. Don't worry about it. The moment that confidence gets rattled, the whole freaking shithouse comes down. You understand? This is why Bostic is going to get away with it. Other Fed presidents and even the vice chairman himself got caught insider trading. Don't matter. They can do what they want to. You and I, we're just dog shit. Anyway, going back to what's happening here. So clearly this instability in the debt market is getting attention. IMF, World Bank, now Janet Yellen, hedge funds, major banks. So the Federal Reserve is in a bad spot here. So because they can't come out and say, hey, we really want to institute yet another round of quantitative easing. So what they're doing is they're having Janet Yellen, who's now concerned, very concerned about issues in the debt market, going to the big, imagine this, just put this together in your head, it's insane. Janet Yellen, the U.S. Treasury Secretary. Let me explain to you. The U.S. Treasury Secretary, do you know what that position actually means? That whoever holds that position is the boss of the banks. It's the boss of the banks. Okay. So what we have here is the U.S. Treasury Secretary, the boss of the banks, going to the banks, we just found this out, the major Wall Street institutions, asking them if they think it's a good idea if the U.S. Treasury starts buying debt, which is obviously a backdoor quantitative easing. You understand? Period. Okay, so if in fact this happens, and I think it's highly likely, the market is going to go orgasmic in a big way because it's quantitative easing. Don't call it quantitative easing, but it's quantitative easing in a backdoor mechanism. Okay. It's just, do you find, let me just, seriously, I want you to comment here. Do you find it interesting at all that the boss of the banks, the U.S. Treasury Secretary is the boss of the banks, is going to the banks and asking them if they think it's a good idea if the U.S. Treasury buys debt? Make that up. You can't make any of this stuff up. It's impossible to do. But that's the situation here. So look, obviously, Janet Yellen feels that there is a financial emergency going on. All right. We're going to have to see how this plays out with other central banks. What are they going to do? The Bank of England supposedly is going to stop or its quantitative easing squared. Let's see what that does. Okay, look. Unless these institutions, these central banks really want to melt down the financial system like now, like this week, action needs to be taken. I've been telling you this for the longest time. If action is not taken, this is it. This is the moment where this whole thing is going to come down. And forget about a stock market crash, because that would be the result. And it would be the biggest crash of all time. What would really manifest itself from here is a global resource problem on an unprecedented scale, a lockup of the financial system in its entirety. Transactions would stop. No cash from the banks. ATMs don't work. Just done. Credit cards don't work. Debit, just done. Finished. Okay. That's where we're going anyway. But are we at that moment now? I guess we're going to find out. Let's see. Look, I don't know about you, but I'm really curious to see what manifests or what comes out of this talk between the boss of the banks, Janet Yellen, and the major Wall Street institutions. Anyway, let us move forward here. A couple of other things. I'm going to call this is funny. So we had, Operation Twist and Operation this, that, and the other thing to try to stabilize the markets back in the day. I'm going to call this thing here Operation Screw Us All. Operation Screw Us All would be if, in fact, the U.S. Treasury starts a new debt expansion cycle. Because make no mistake, that's what this would be. If, in fact, this happens and the Treasury starts buying the debt, it would be another way to vastly inflate the debt. So Operation Screw Us All. What do you think of that? Maybe you can come up with something better, but I like Screw Us All. Because it is. Look, because what's this going to do? Let's put that into perspective. Let's say, for example, this actually happens. Yellen goes to the banks and says, hey, you think it's a good idea if the Treasury buys the debt? Well, besides the CEOs of the Wall Street super banks spraying their shorts all over the place and foaming at the mouth, of course, it's massively inflationary because you can't have your cake and eat it too. They want you to think, okay, we're just going to go out here, we're going to buy all the debt like central banks have been doing since time immemorial, well, since the last meltdown here. And what kind of environment are we in? Inflation surging around the world. And you think that's by accident? Duh. No. So anyway, massively inflationary and another expansionary monetary policy, whatever, is inflationary. But you see, you're not allowed to know that. You're not allowed to know any of this stuff. It's out of control. What do you think of President Bostic? Should he be in handcuffs? Yeah, he should. Will he? No. Anyway, what else did I want to say here? A couple of things we're going to need to keep our eyes on this week. Obviously, the 10-year yield. We're over 4%. Again, let me just put this into perspective. It's not really so much the number. It's the pace at how fast we're rising, how fast rates are rising based on the speed of the sell-off in the debt market. You understand? So, with that in mind, keep your eyes on the 10-year yield. I'll keep you on top of it as I do every day. The dollar. The relative strength of the dollar has gone crazy. Okay, no surprise to anybody who follows this blog. We have covered this over a year ago. We would see this phenomenon play out. Exponentially stronger dollar on a relative basis, okay? On absolute terms, the dollar and every other single currency, they're all in free fall, okay? Race to the bottom. Central banks determined to kill their currency. Determined to kill the economy. Why they're raising rates? To wipe out an entire class of people, to extort more control out of the global population via this mechanism here. Like I said, they really want to control inflation. All they got to do, central banks, is raise the capital reserve requirements, but they're not going to do that. Why? Because they need to continue to inflate the money supply. No brainer. You and I have spoken about this several times. Okay, you know the situation. I showed you that lovely chart of the money supply. That will expand. Central banks are not going to stop inflating. You know that. What's the goal of central banks? To continue to inflate. They're not going to stop. A central bank's power resides in one thing: its ability to inflate. Nothing else. Period. The more they inflate, the stronger they become, and they're not going to give up that power even if they have to kill, and I mean that in the literal sense, millions and tens of millions of people. They're not going to give it up. Okay? Our politicians, they're all in the back pocket of the central banks because central banks run the entire freaking world. I think it's pretty obvious, and everything else is just a side act, a theater. Democrats, Republicans, whatever it might be, it's just a method to keep us divided. It's not real. Once you realize that, if your vote really counted, you wouldn't be allowed to vote anyway. Okay, all the rest of it is just a mechanism, and I think you're well aware of that. Keep your eyes on the MMRI. People with 282, the Mannarino Market Risk Indicator, at 300. That's extreme risk. What have I been telling people lately? If you're long this market, have your positions hedged in one way or the other, or get out of the market altogether until this thing plays out. Until let's say, for example, the Treasury is going to stop buying all the debt. Look, central banks. This whole thing is just, I could go on and on about it. It's so twisted, and you know that if you follow this blog, but no one has a better handle on it than you do. That's the truth here. Proudly, I can say that I've kept many, 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 many tens of thousands of people way ahead of the curve, understanding the markets, understanding how this whole thing works. And again, this isn't just my thing. This is our thing, and I'm so proud to say that if you're here for the first time, or if you've been with me for years, this is a movement, okay? And we're making a difference. We're making a difference. I sincerely believe that how you and I have covered the issues in the debt market, the instability here, may have something to do with why the mainstream propaganda ministry is covering it, okay? Because they're hearing this stuff from this blog, which isn't small. It's not big, but it's not small. But we're making noise. We're raising awareness. And we're making a difference, people. I believe that we are. That's the only reason I am here. I want people to understand the system. as much as they possibly can and realize what's happening to them. Okay? Look, this guy here loves you a lot. I could go on and on. Comment here. Please share the video. Let me know what you think. I will read the comments as I do. I'll try to respond to them as I do. Not all the comments, obviously. It's impossible to do. But I do read them. And that's it, people. I'll see all of you in the morning. Looking forward to it. It's going to be an incredible week. I really feel that this week could be the moment where this thing breaks. Either it's going to break, meaning we're going to see bond yields continue to rise as bonds sell off. It's an illiquid market. This is the biggest threat to the world economy, to the world population, and the financial system as a whole. It's all linked, okay? It's all linked together. It should be pretty obvious to you, all right? See you in the morning. Have a great day.